Hi, this is Acme with the weekend edition of the Bulletin Board Heroes here at Box Markets. It is Sunday, the 19th of February. Starting off with the FTSE 100, which managed to close 4 points above the all-important 8,000 level. We seem to be in mid-flow in terms of this rising trend channel in place since the end of September. Top of that channel now heading rapidly towards 8,200, which we are now looking for by the end of next month. We normally have these 4 to 6 week time frame targets. In terms of support, well, probably still looking at that initial February resistance area, 7,900 or so, as the likely place that any retracements would go. A bit nearer, up to 7,950. If we're lucky, that would be great, and that was the sort of the second resistance area earlier this month. So above 7,950, looking for that 8,200 area relatively quickly. On to the DAX, which didn't have quite such a smooth ride over the recent past, more sort of sideways and bumpy consolidation. In terms of the levels here, 14,900 was the support at the end of last month. That was elevated up to the gap area, 15,200 at the beginning of this month, and then we got 15,600 or so as the peak so far. The ultimate destination up to as high as 16,400 by the end of next month. At the top of that rising trend channel from September, we still have that rather weird resistance line there from the same month, which the market seems to be hugging on various occasions, which is rather weird, as I said. But let's see if we can hold 15,200 ahead of a further move to the upside on the DAX. So we break back below the expected support areas, and the worst at the moment is 14,800 at the 50-day moving average, but hopefully it won't come to that. Got that line of support there, rather higher there from the beginning of October, and that's around 15,100. On to the Dow, which has been the laggard of the big three here. Here we've been hoping and praying that this market would stay above the 50-day moving average. That's around 33,600. We actually dipped below that on Friday, but then bounced back, which is a good sign. Hopefully this rather extended consolidation between the 50-day line and the early 2022 resistance line, 34,300, will eventually result in a move to the upside. End of day close through 34,300. We're looking at 36,000 by the end of next month. Otherwise, it's more consolidation down towards 33,000 or 32,900. RSI right in the neutral zone there, so not helping us very much at all. But you can see that I suppose it's half full rather than half empty. On to Bitcoin, which has been trying to break higher over the latter part of the week. Nice little turnaround there after the bear trap below 22,000, and also a rebound above the rising 50-day moving average at around 21,000. What will be useful here, I suppose, is to get a definitive move higher for the 200-day line. It was sort of rising going into February, but then went flat. But if we can see that starting to curl up, then I think that would accelerate the move higher for Bitcoin towards the target we've been looking at for quite some time now, 30,000 at the top of that broadening triangle from June. So that would hopefully be hit by the end of next month, and I suppose if we were really lucky by the end of this month. But as I've said before, we'll normally go for a more conservative target on time frame. On to the stocks, and one that wasn't one of the rises of the recent past, but just looking at Angus now after the obvious disappointment. We were peaking up near 3p back in the autumn, and gap down back in December. Not a nice thing to happen. The other point here, we weren't far off a dead cross there between the 50 and 200-day moving averages just a couple of weeks ago. What's interesting now is that we had that old support area from April and May around the 1 penny level, and the low last week or during the week 0.9. So there's a possibility here that we've had a bear trap. No bullish divergence, but the end of day close back above a penny, and the old April-May support is quite interesting and could suggest that the next move here is up to 1.3, which would be a nice near-term rebound. Breaking 1.3 now, the level to get us back into the uptrend type of zone that we were in from the start of last year up to September. So just the first signs there that Angus is starting to turn around. If you're cautious, you'd probably wait for the RSI to get above 50 as opposed to just rebounding off oversold territory at the moment. But let's see if that early bird hint of a turnaround does actually work there on Angus. Moving on to Barron Oil, which surprised me during the week with the spike through to 0.27, nearly 0.28 actually. We were looking for that maybe by the end of next month when the shares were around 0.2, but we went up there and then came back. 0.2 now looks like it's pretty well established as support, which is great. So bouncing off the old broken January resistance lines above 0.2, really looking for a retest, that 0.27, 0.28 area, and then hopefully by the end of next month up towards retesting October resistance of 0.35. Stock which doesn't get much airtime here is next, Botswana Diamonds, and here a rather messy chart resolving on a break of the 200-day moving average of 0.93. We're already near one of our targets, the initial target there of 1.25, and looking for 1.5 maybe by the end of next month at the current rate of progress, especially while we remain above the 1 penny level. Amazed to see such a good performance in Creo. I suppose the placing price, the fundraising price at 20 pence, shares at now right now at 34 pence, hitting one of the targets there, the initial target there, around 37 pence, which is great. End of day close above that, we could be looking at 50 pence by the end of next month. But the real sizzle here, that push through the 50-day moving average and the rally after funding or proposed funding news for the shares. We were made all the more confident in a rally on the basis of the bullish divergence that we had, and that was noted, I think, when we were around the low to mid 20s. On to one of the best performers of the week, which bagged Clontarf. That also hit one of our initial targets there around 0.18. We're looking for an end of day close back above 0.18 to give us a potential move. The next move, the big move, up towards 0.36 and the top of that June gap down. And things go well, maybe we could get that by the end of next month. Otherwise, I suppose there'd be more consolidation in the 0.15 to 0.2 area over the near term. A recent IPO, which may be starting to turn around, is Hellenic Dynamics. Here we've broken a line of resistance there from back in December versus 0.09 pence. Initial target here, the 50-day line at 0.13. And if we can clear that, then we're looking to the top of that falling trend channel from the beginning of December as high as 0.23. Maybe the time frame on that would be as soon as the end of next month, if all goes well on the recovery of the 50-day moving average. Stock which had some good news at the end of the week was Inland Homes, and the shares responded in kind. We've already had bullish divergence there before the news, so that may suggest that one or two people guessed correctly that there was going to be good news coming through. Current position is at above support on the way down at 11 pence. We are looking, rather resistance on the way down at 11 pence. We're looking for an initial move to the top of that gap there at 18 pence. Best case scenario target up to 25 pence over the next 4 to 6 weeks. But ideally we stay above the 11 pence area as the shares consolidate / recover. OPG is next, and here we've had a clear run over the second half of the week through the main resistance zone of 7.25. Above that, we're looking for 10.25 or 10.5 pence actually, which is a March resistance line projection from last week. So let's see if OPG can step up to the plate. There was actually bullish divergence there with the December lows there. They were lower than the ones we saw back in September, and so that did hint, if you were watching the stock, which I wasn't, that there was going to be a turnaround for the stock. The fact that we've got now both the 50 and 200-day moving averages rising suggests we're in the run-up to a golden cross. So 10.5 pence could actually be the minimum on the upside for this situation, which has been, I suppose, consolidating for the best part of a year. So let's see how we go there. Moving on to a stock which I mentioned in my editorial just earlier this morning, in fact, if you've seen it. Here we've got OKYO, which was always looking good on the charting front. We had that final bear trap, though, I suppose, below 2 pence, which might have caught some people off guard, but then breaking that line of resistance from September. And the 50-day moving average, 2.6 pence, got the shares on their way. We then broke the 200-day line just during last week, and obviously the big spike on Friday, which was, I think, inspired by a lot of activity stateside. Current situation is at above 5 pence, which was our original target on a technical basis, looking for 9.5 pence by the end of next month. Obviously, these situations tend to pull back more than we expect, but 4.5, 5 pence should cover any setback, given that we had 8 pence as the peak on Friday. On to Rockfire, which has got its act together both on a fundamental and a technical perspective over the recent past. Unfilled gap to the upside back in January, and the same again in February, which is pretty impressive. And that does suggest that not only, well, we've already hit one of the targets, 0.21 at that October resistance line. That does suggest that the shares should be able to fill the gap back up there from October at 0.25, and then maybe even stretch as high as 0.3 over the next 1 to 2 months. So 0.25 maybe by the end of next month. Moving along to the last three. First one is Synergia, which was requested during the week. This is broken through the 200-day moving average at 0.13. Above that, we're looking for 0.19 at the top of a broadening September trend channel. And we can see that by the end of next month. Only back below 0.12, really, which was the initial January peak, really delaying the upside scenario. Staffline is a stock which has been mentioned on Twitter for me to look at, which is very generous. I think here we already had bullish divergence there back in January, so that was the first hint that shows we're going to turn around, implying an entry point around 35 pence. We've had a bit of consolidation at and below that level, but another gap during the week. And the V now is at above 35, looking for not only the 200-day moving average at 41, but up to the top of that broadening triangle from June, as high as 52 pence by the end of next month. Finishing off with another stock which is mentioned in the weekly stock market update, Rogue Baron. Here we had director buying, which seems to have done the trick. A bit of a bear trap there from below the old summer support there for the shares. We still need to get back above the 1.5 pence level, but with the bear trap rebound that we had from below the old January support there at 0.84, that's the key level really. Unfilled gap to the upside on Thursday and breaking the high of that day. So looking for a pretty decent upside here. Initially 1.8 pence at the 200-day moving average, and then maybe by the end of next month as high as 2.5 pence at the top of that 2022 broadening triangle. That's it for me today. More updates during the week.